It says 59% of trades happened within one trading day of a major market event. Can you walk us through what that means?
Yeah, we looked at all of the trades, excluding obviously weekends, and we look at when they took place. And some of the biggest and busiest days were inflation days in January and in February. We looked at the day before, the day of the inflation report, and the day after. Now, this does not mean that the president had any inside information. It could have corresponded with some automatic trades, but that is interesting. And it shows that the president or his team pay a lot of attention to what's going on in the macro world and the macroeconomic data.
When you did this analysis, what stands out to you the most? Is it the quantity of trades that took place here? Is it what the president traded or what his account traded? What's most interesting to you as somebody who's kind of digging through all of this?
Yeah, it's interesting that the trades are very chaotic, which means that it's probably a compilation of several accounts, several investment accounts, not just one. Because I'll give an example. You saw the same stocks being bought and being sold on the very same day. Sometimes,
the same day?
Sometimes multiple times a day.
Interesting.
Which probably means that there were different entities taking care of the trades, executing the trades. And what it also means is it's probably a combination of a human making the trade and an automated trade. So, which leads us to believe that we just don't know if, these entities talk to each other or if it's just some kind of, a compilation of different trades in the markets.
That's so interesting. So this story lit up like wildfire, especially over the Twitterverse, the Xverse, whatever we call it now. It was picked up a lot, I think just because some of those numbers are so huge. And we had one of your colleagues on last week when this first broke, and she was saying there was a lot of things they still didn't know, including some of the stuff you're talking about. So how did you find that out? Was it that more information was released, or you've had more time to go through it?
We had more time to go through the data and analyze the data, but we had a lot of information, but not enough to make any conclusions. But for example, the dollar range of the trades would go from $100,000 to $250,000. So we could talk about no trades, just a couple of hundreds of stocks, or we can talk about dozens of hundreds of stocks trades. So we don't really just know that. What we do know is a lot of the trades, 2,000 of the 3,700 trades happened in March, and we know that that's when the war in Iran started. So some of the trades in March were done by human beings. We can see in the contours. We don't know that for sure, but we see the contours of that trade. We see discretionary positions. We see some of the actions in the market, and we just looked at what was bought and what was sold and how the market performed on those days. So the trades in March had some contours of an actual human being doing that. Other than that, we don't really know. So it's some of those trades are tax harvest losses, when your portfolio underperforms and you just sell the stocks to pay fewer taxes. But some of that is just some automatic trades that just happen for no reason.
I want to get into this because you and your colleagues have such visibility into sort of how high net worth individuals approach their investments.
Yeah, these are not problems I have.
No,
but
right.
Yeah.
And this is a unique high net worth individual. But as you talk about the fact that there was clearly some, not clearly, but likely some human involvement here, some algorithmic involvement. You mentioned the tax harvesting efforts that were put in play as well. How normal is that when you look at somebody who has these kinds of means? Is this an anomalous way of approaching one's portfolio, or is this the way that a lot of wealthy people would think about handling their investments?
This is an enormous way of approaching portfolio for someone like President Donald Trump.
Okay.
Arguably the person who is so widely followed on social media, who talks about the stock market all the time. So we know for sure that a lot of people are going to be laser focused on these trades, laser focused on analyzing the portfolios. But the dozens of experts we talked to said it's very hard to make a conclusion that these trades were profitable. In fact, there are some signs that show that these trades were not profitable. Of course, it's impossible to just connect the dots for so many trades at the same time. But yeah, that's just quite a dilemma for sure.
That's so interesting. Yeah, we talked about that last week, especially if you're talking about, it seems like one hand doesn't know what the other hand is doing, and they're doing trades that are canceling each other out. And just folks we talked to said the sheer volume is a little bit, chasing your tail, and it doesn't really show a strategy. What would be your recommendation looking at these numbers? Like, calm down, like pick back a horse that you believe in. Too much trading.
Yeah, too much trading. I wouldn't advise anyone. I'm not in a position to make an investment advice. But
right.
Yes, don't look at the trades and just follow the trades blindly, just because of, some of the trades were chaotic because there were several entities executing the trade. But also, on the grand scheme of things, this is the biggest filing we have ever seen from a sitting U.S. president. So it's just really important and really interesting, frankly, just to analyze that and see what potential fundamental strategies were implemented, how the trades were executed, I'm sure that's going to be an evolving story and evolving conversation.
You mentioned looking at this in complement with the way that other presidents have approached their investments. I'm curious, as you and your colleagues looked at President Trump's disclosure from the first quarter as compared to quarters before that, maybe during his first term, how much has his or his team's approach changed just himself? I mean, it seems like this is anomalous in the context of his trades overall.
Yeah, I mean, we never saw a filing that was this big. And he's not, just under any obligation to be this specific in the filing. So that was really interesting.
And can you explain what the threshold is for what you have to file and what the disclosure is?
Yeah, so, every significant trades you have to disclose, but you don't have to disclose the profit or loss. You don't have to disclose the sheer volume of trades. You can give us a ballpark of the dollar value of the trades. Okay. So that's what was given. For example, the ballpark would be $100,000 to $250,000. So go figure. Was it, somewhere in between? Was it on the lower end? Was it on the higher end? We just do not know. Yes, but some of the trades, there were 3,700s. Some of them were municipal debt obligations. Some of them were corporate debt. So it was mostly about the stock market, but not just about the stock market.
A basic question here. Did it work? Is this working for President Trump? So when you look at all of this in aggregate, the volume of trades that you're talking about, the efforts to buy and sell sometimes multiple times in a day, is he beating benchmarks? Is this paying off for the president? Do we have any indication of that based on this financial disclosure?
We have no indication.
None.
There is no way of knowing that.
That's no fun. All right.
Yes, I know there is a lot of talk about that in the media. There is a lot of talk about that on Twitter, but we just don't know if he profited from the trade. And some of the contours of some of those trades show that he didn't.
You talk about the timing of this and how it was timed to some of the inflation announcements. Are there any other trades timed to any other events like the invasion of the war in Iran or what happened in Venezuela? Do you see any other timelines lining up with historical events or policy
Maybe even
making?
meetings with executives?
Exactly, policy out of the White House.
Yeah, I know it was interesting that he made a trade of Apple about a week before he talked to Tim Cook. Not talked, he praised CEO of Apple, Tim Cook, publicly. So again, we don't know how the trade panned out. We don't know when it was bought and when it was sold. All we see is just that happened. And then we cannot just make any definitive conclusions off of that. But just one point is a big part of those trades happened in March, happened at the beginning of March, when there was a lot of volatility around the price of crude oil, around the stock market, around the CBOE VIX index. So that actually tells us that his advisors, whoever executed the trades, are paying a lot of attention to the markets.
About a minute left. I wonder if you could kind of synthesize the blowback that this disclosure is getting. So we've heard from the likes of Senator Elizabeth Warren, other lawmakers saying, look, we long for a quainter time when presidents had their assets in a blind trust and really didn't touch them and didn't trade in stocks. How much of a groundswell is there kind of against the president looking at the trading strategy that we see here? Yeah,
we talked to a lot of strategists in the stock market who analyze portfolios of high net worth individuals, who analyze tax loss strategies. And what they tell us is, that's a standard procedure for a lot of big funds. It's not, usually as big as the current one. But what is interesting is, it remains to be seen if the president is going to continue disclosing his filings at this amount. Because if that happens to be the case, then we're going to see the quarter-by-quarter comparison. 3,700 announcements in the first quarter, followed by the second quarter, followed by the third quarter, and then we can talk about making some definitive conclusions.